Hello and welcome to this week's episode for SPY Trader Now. I am your host. My name is Ken and our model portfolio is up 24.92% year to date. We have a green for our stock market strength color signal. Our model portfolio is doing fantastic at just under 25%. And we are beating the returns of the S&P 500 buy and hold investor. Their portfolio is up 21.82% year to date. Last week, the S&P 500 lost 0.95% for the week. This weekly candlestick chart is got a duration of 5 years. And in this chart, we can see how the market has been making higher highs and higher lows, and we are right here. You can see it pretty well in the thumbnail. And we are bullish, except we do have a negative divergence because you can see that you're making higher highs here on the price action, but on the MACD, you are making lower highs, and we have not broken this line yet. Until we break this blue line right here, we are going to remain in this negative divergence condition. And to make matters worse, the MACD appears to have topped. It is flattening out, and you can see that it is losing energy and getting ready to cross below its signal line. If that were to happen, then for sure you're going to see this come down below this line here, which is a support line. And this market is going to fall down. To what extent, we don't exactly know, but we know that it is definitely going to be losing energy if indeed we were to do it. This will be the first line of support right here, first line that we're going to see signs of cracking. And then this will continue to deteriorate. Your slow stochastics will go below 80 and it will begin to come down here. So all these things are going to start to happen if indeed this market makes the decision that it wants to do so. Now, I do have in here an in the money covered call, and I'll go through that in the presentation. My strike price is 540. So if I take that and come across here, our portfolio is protected for all of next week. If we were to drop and come down and find support at this level and then begin to rise and come up here and surpass. So we'll see how this whole thing plays out in the next week. Last week, we did make one trade. So we did send that trade alert out on Wednesday, October 23rd at 8:01 Pacific Standard Time. And what we ended up doing was the market was looking like it's topping. To protect our profits, we will put on 2 contracts and sell 2 in the money covered calls. This is the exact transaction right here, where we're going to sell the 540 strike, 11/1/24 expiration, which takes us till Friday of next week. And for that, we got paid $41.73, or a total of $8,346. Granted, some of that money is in the money covered call money, and so we have time premium and we have in the money premium, but that's okay. And so if this market comes down and it turns out that these price of the shares are going to be dropping, we'll buy to close it at a lower price and we will make our profit that way. Either way, I just didn't want to risk losing any money in our model portfolio for next week because of the way things are looking, as we'll show you in this presentation today. Okay, here are all the trades we've made in calendar year 2024. The yellow represents our open positions. We have 2 open positions. We currently have 200 shares of SPY, and we have been in this trade for 19 days, and we are profitable in that trade by $1,518. Now, on Wednesday, as you know, on 10/23/24, I did buy in the money covered call with 200 shares, And at that point, I sold it for $41.73. Currently, it is worth $39.51. So we're profitable in that trade by $444. And if this market continues to deteriorate, this number here will continue to go down, and this number, our profit, will continue to go up. So we'll watch that to see how that plays out during the next week, because we have a very short expiration date. It's only one more. We expire on November 1st, which is Friday of next week. So let's watch next week's action to see how we do. If you want to watch me how I trade this portfolio throughout the year, go ahead and smash that like button down, subscribe to my channel, and ring that bell to be notified when I post a new video. All right, here is our model portfolio in blue against the benchmark of the S&P 500 buy and hold investor in pink. Both portfolios are doing quite well, but we are surpassing the buy and hold investor, and you can see here the returns. So we're up on them by about 3 percentage points right now. Our goal is to beat the buy and hold investor by a minimum of 5 percentage points throughout the year, and we like to have a minimum of 15 to 20% if we can of our goal for how much our year-to-date returns are at the end of the calendar year. We're far surpassing that 15 to 20. We're at 25 now. Our next target zone is going to be, we're going to try to hit 30% before the end of this calendar year. So this here is the 1 year chart, and we will end the portfolio at the end December 31st. So we have this much space in order to get 5 more percentage points and try not to lose our 24.92% that we've already gained this year. All right, now we are looking at a daily candlestick chart for the S&P 500. And in this chart, you can kind of see the cycles where you kind of come up, come down, come up, come down, come up. Now it looks like we've come right down there and met that support line right there. And it is possible that this is now going to start taking off. Or it is possible that this support line is not going to hold, and this is going to continue to tank down. So we're kind of at a tricky point here. The fact that you see the MACD is below its signal line, slow stochastics below its signal line heading south, MACD heading south, that means that there's less energy to push this up, and there is energy dragging this down. So with that energy dragging this down, it is very possible that this support is going to give way next week, and we are going to come down to a certain level of support. Where exactly that support's going to lie, I'm not really sure. The in-the-money covered call has a strike price of 540. We are protected from the highs by about 8 percentage points. So we've got plenty of downside protection in here until this market finds its footing, turns around, and then starts going north. So if this were indeed to happen, we're going to keep our in-the-money covered call on until we start seeing some bottom footing happen here. Let's just watch next week's action to see how we want to do our trade. We have plenty of options here, folks. We can, if this market continues to go north, we'll just wait till Friday happens. We'll let our shares be taken away, and then on Monday of next week, we'll go ahead and buy in and start going long. If this market continues to tank from here, we're going to leave that on, and if it takes longer than Friday, we'll roll that out to a longer duration. We'll go out another week. Let's wait till Wednesday or Thursday to make that decision. Let's see what these candlesticks start to look like during the week before we choose our next steps. All right, now we're looking at a ratio chart from the NASDAQ 100 against the S&P 500. The ratio chart is the one that is in black and red. In blue, we have the S&P 500. In black, you have the NASDAQ 100. Now, this chart here is showing that the ratio chart is above two moving averages. We've got the 50 and the 10 period moving average, and we are trading above both of those. There was a resistance line, and the ratio chart broke through. All of these actions is telling you that risk is on and is bullish. On the MACD, you have a crossover above the signal line. On the slow stochastics, you are above the signal line. This looks like it's heading north. This looks like it's going to head north. All of this activity is bullish. All right, now we are looking at the VIX Volatility Fear Index. That is the candlestick chart. In dark blue, we have the S&P 500 right there. Now, we have three ranges. Above this green line is the upper range, bearish. Between these two green lines is the low range, bullish. Below this green line here, that is the ultra low range, which is also bullish. You can see we spent a lot of time last year or during the year of 2024 in the ultra low range. So where are we at right now? Right now, we are right here on the cusp of the top end of the low range and the bottom end of the upper range bearish. Now, what do you got going on? You have the MACD bottoming and heading towards its signal line. It looks like it wants to head north. Slow stochastics already above its signal line. It looks like it wants to head north. Well, if that happens and it carries through the VIX with it, the VIX is going to start heading north. The S&P 500 is absolutely going to start heading south. So I would say that with the information that you're seeing on this chart here, it looks like there's more probability that you're going to head down or south than you are to head north or sideways. So you're either going to head sideways or head down. Those are the highest probabilities. Heading north on this VIX chart, it looks like is of the lowest probability that I'm seeing, especially based off of this information right here. Oh, and look at this. You have a low, you have a higher low. Well, if you draw your trajectory line, you are traveling north, even with that, making higher lows. Okay, now we are on the Thinkorswim platform, and we are looking at a 3-year weekly chart for SPY. We have standard deviations of +2, -2 in gold, +1, -1 in pink, and we have some cycle brackets down here at the bottom with the minor and majors. And this here is where a low should be coming in, and it's a little unclear if that is the low or if it is yet to be developed and it's running a little late. But if I was to just go straight up with this timing bracket, it'd be somewhere in that window there. But it is possible that that is the low right there. We'll see how this continues on. We do know that I put in here a couple of trajectories, a higher one here and a lower one here. Currently, the market looks like it's taking in the path of the lower trajectory right now. So we're watching this to see how this plays out. Let's switch over. Let's go to the daily chart and go to a 1-year daily and change our brackets to 1-year daily. And let's see what's happening on this chart here. Okay, now I do have in here a potential direction that I thought we were going to go in, and we are trading below my expected range that we were going to be traveling in. So we're losing a little bit of steam. We have a couple of targets here with the low one of 591 and a higher one at 599.89, just under 600. So I don't know if we're going to get those right now or exactly what's going to happen. First line of defense is this line here. So we're going to see if we hold that line there. We know we have protection all the way to 540. So we're good anywhere in this range here for the market to fall to without us losing money, because we have an in the money covered calls protecting the majority of our portfolio. So we're going to have to wait and watch next week's action here to see what direction this thing actually wants to go in. MACD, slow stow, losing energy. It looks like they want to head down, giving room for this market to come down to some level. All right, now we're looking at an Excel spreadsheet that I created, and in an effort to determine the strength of asset classes and the 11 S&P 500 sectors. And the way that I've got it drawn, if you have a 5 or a 6, I give it the color green. Anything lower than a 5 gets no green. The more green on the screen, the more stronger things are looking for both of these items here. We are still strong. We still have green signals, but we're losing energy. If you look at last week's reading of 89, now this week's reading 74. Last week's reading 88, this week's reading 76. So we know that we are losing strength across the 11 sectors and across various asset classes. Now we are looking at a chart of TNX, which is 10-year U.S. Treasury yields. Now that chart is the candlestick chart. In dark blue, we have the S&P 500. In black, we have TLT, which is 20-year bonds. As the TNX chart travels north, the black chart, which is TLT, travels down this way. Now, I thought that we were going to go up from this level, and that's why I put this green marker in there, and I thought that we were going to stop at this line right here. We did not. We continued to go past that line until we hit this line. Then we found resistance, came down, tagged this line, and then went up to a higher line. Well, that is all bullish action for TNX, because now you're making higher lows and higher highs. So, but it looks like we may have found a resistance point at that candle right there. The next two candles have gone below that candle, although on Friday's action you can see that here in the thumbnail, you can see it really well. That was a big positive candle right there on Friday. But we do have so much trading that took place in this area that I'm thinking that we have reached a level of resistance. So my expectation is that we're going to start traveling sideways to down, and hopefully all the way down to this level here. But anything below this line here would be beneficial for what we're happening here. Now, I do have in here a trade that I made in my 401k account. So I did buy MWTX, which is representative of something like TLT. So my expectation is for TNX to be traveling down, and during that time frame, TLT is going to be traveling north. And my position that I put on, which was a small position, 10%, certainly not going to blow up the portfolio, but I want to start seeing this starting to travel north. And then what I'll do is I'll change that 10% to 20%. So I'll pyramid into the position trying to capture gains if my prediction is correct, and that TNX starts heading down and TLT starts heading north. Now, what is SPY going to do during this time frame? Well, normally speaking, when you travel down in TNX, that is normally bullish for SPY and TLT. Both of those should be traveling north. The problem is that when TNX did travel north here and TLT took a bath, during that entire time frame, SPY continued to travel north, never giving any ground. It would have been a little healthy for it to give up a little bit of ground and then find a level of support and then continue. But the fact that we never gave ground here leads me to believe that the market has got so much priced into this market that any little hiccup in this SPY is just going to start traveling south. So we're going to wait and see how next week plays out. From my point of view, I'm hoping that we've reached a level of resistance now and that TNX starts traveling down. If we continue to travel north on TNX, well, ultimately that is definitely going to affect everything, TLT and SPY. Both of these are also going to start traveling south if TNX continues to travel north. So let's see how that plays out next week. Okay guys, we are coming to the conclusion of this video. I gave you guys a ton of information in this intra month. I go through 2 videos. During the month, I call them intra month, which is a shortened, condensed video. At the end of each calendar month, I go through a full video where I go into much greater detail, longer videos, more content. But during the month, we just want to try to make it short and sweet. So not this video, but the following next week's video will be an end of month video, longer duration, more content. Well, as of October 26th, 2024, the market summation, according to me, Ken, your friendly host for SPY Trader Now. The charts are telling me this market is beginning to crack, but holding at support for now. We need to see next week's action to see the trend, and we are protected all the way down to 540 if we start heading south. So while we're trying to determine what the market trend is, we're in a safe position to protect our profits just in case this market starts heading south before the trend is actually realized. So I gave you guys the trade here. I prepped you. I thought I was going to take on a little bit more softer, not this strike price. I thought it was going to be a higher strike price, but after considering everything, I wanted more protection. So I went more deeper in the money on the covered call because I wanted more protection from the portfolio. Because if this market starts heading south, I'm afraid it's going to head south quickly, not slowly. So it's a little unclear what exactly it's going to do because it hasn't done it yet, but I wanted protections in place. That is the whole reason why I did the in the money covered calls. Our portfolio is doing good. We're very happy with our returns. And even though I say these things and go through these charts, the stock market is an 800-pound gorilla, and this 800-pound gorilla right here is going to do whatever it wants to do whenever it wants to do it. I hope you got some valuable information out of this video. If you have not done so already, smash that like button down, subscribe to my channel, and ring that bell. I thank you and wish you good trading.